We were already down 2%. And as a very general rule, if we already have a pretty good move, which I would consider 0.75% or more already, I'm actually kind of inclined to get in a little on the earlier side, figuring that the majority of whatever move we're going to have has happened, right?
In this video, we're going over a day trade recap from Dr. Metals. Dr. Metals is one of the best zero DTE traders in the world, and he has a course out called the Statistical Day Trading Course. If you want to learn from him, we encourage you to take a look at that course or join the Dorian Trader, and you can learn firsthand from him and others at the Dorian Trader.
Hey, O'Brien,
Hey,
Doc here.
hey, Dr. Metals, how you doing this afternoon?
Yes, listening to your commentary on your zero DTE, and I posted in the Discord. I was wondering if somebody could, including yourself, take a look at things and
Yeah, absolutely. Let's do it.
have a guess as to what went on. Certainly, I X'd out
Let me
a
make
few,
this a little bigger, and we'll see.
yeah, a few
Let me
smaller
see. How do
positions that were just
they changed it up
filler.
on us there? There we go. All right,
Hmm.
so let me take a quick look, and you X out some stuff that shouldn't been there. Or what?
Well, in essence, correct.
Okay,
Just clouding the picture a little bit. Some very
okay.
temporary positions, and honestly, I got like, after I got out of this big position, I actually
Mm-hmm,
put on like three more contracts on either side, like really
mm-hmm,
small, riding
mm-hmm.
through the close here. I just didn't want to confuse things. It's not
Okay.
going to matter much. But this is. Well, I'll let you take a look and see what you come
Yeah,
up
yeah.
with there.
So based on what you have here, it looks like to me that you were you originally put it on the put side at the 53.40. And you put the call side on originally, not including the black stuff because I can't see that. So
Yeah,
including the call stuff, you put the call at the 55.80,
that's correct.
and when you put it on maybe when the market was, maybe up, excuse me, down maybe 80 points, maybe 90 points, something like that, and so you got stopped out on the call side, and or you did a. It looks like you probably did a. If you didn't get stopped out, you did a neutral a kind of a cash neutral adjustment as you
That
call
that's
it, right?
that that's exactly it. Yes.
Yeah.
You see the minus 2000 at the 55.80 and the plus 2000 at the 53.40.
Yes.
That's exactly what happened. So yeah, I
Mm-hmm.
put this on. We were down about 1.7% or so, you know,
Mm-hmm.
and I put it on and the market just kind of steadily, thankfully not too rapidly, but it just kind of steadily started creeping up.
Yeah.
And I think we got up to about maybe 1.3%, something like that. It moved about 0.4% and kind of in a steady march up, not too crazy, but just enough where I was like, you know what? I may have missed that little window where the market was going to settle down.
Mm-hmm.
And rather than enduring the stress of, potentially getting stopped out, I was like, let me go
Mm-hmm.
ahead and make that move up. So yeah, it only took so it was like a 15, what is that? Yeah, 15 strike move from 53.40 to 53.65 and just a 10-point move on the call side up to the new strikes, the 55.90s. So again, I'm just changing my short strikes out. You notice my longs, the 52.45 and the 56.60. And as a point of and another thing to note, you guys, I usually like to, pay a nickel for these strikes, but with the elevated VIX, it's for even for my size to count, I couldn't put on 30 contracts and pay a nickel for it. Like this, it's just way too wide, in
Mm-hmm.
terms of the buying power eat up.
Mm-hmm.
So you see, what am I on the call side there? Is that how wide was that?
So the call side
55.90 to
looks like it was
56,
80 points wide on the call side.
80
You see.
wide, yeah,
Yeah.
and probably similar on the put side. So I'm paying 20 cents or so for these longs and whatnot.
Mm-hmm.
That seems to be kind of where I'm ending up. Now the other good side of that is like I could have, particularly on the long side. I mean, I could have stretched and bought the nickels longs and ate up a lot more buying power. I would not have
Mm-hmm.
had the buying power to make that adjustment though and roll
Okay.
up. Just
Okay.
what I mean, if I'd have done that.
Yes. And,
Hmm.
and so this is pretty awesome. What this is one of those adjustments that Dr. Mills talks about in the statistical day trading course is that, as you can see here, you guys, the call side becoming the problem side, the tested side, and so he was down 2,000 here basically on this call side on the original trade, and he was up 2,000 on the original put trade. So it's basically break even at that point, right? And so what he
Minus
did was,
fees and commissions, which we can't
yeah,
ignore.
minus fees, commission. So you got
Yeah.
to factor that in. But for simplicity purposes, to kind of
Yeah.
explain this, you guys, that's a that's a cash neutral adjustment, right? It's not he's not doing it for debit, he's not doing it for credit, right? Give or take, right? So so by doing that, he moved the call side only 10 points, but that's big in zero DT trades a lot of the times. And so moved it there, took a lot of pressure off the trade, moved up the put side, didn't have to move it up a ton, but what is that? 25 points you had to move it up actually. So that's what 50, 40 plus 65, yeah, 25 points you had to move it up.
Yeah.
And
That's actually a pretty decent. Yeah. That's actually pretty
yeah,
decent thing there. Yeah.
yeah, yeah, decent move up, right? And then keeping in mind that we were down 120 plus points at one point. So then he got this here. He just a proactive adjustment to allow so he wouldn't get stopped out, and obviously he didn't get stopped out afterwards. So now you collect 69 or 2,900 on the new put strike, and then you collect another 2,900 on the new call strike. And what he did was just move the short legs. He never touched this long leg here on the call side and never touched this long leg here on the put side. And so that's what he meant earlier about buying power, that, because volatility is higher right now and expected moves are bigger, for him to get to a 5 cents, you would have to go more than 100 points wide, sometime even 150 points wide to be able to just get to buy at the 5. So he wouldn't want to do that, because when he adjusts, he most of the time only likes to adjust the short leg. And so sometimes you can start off with like an 80-point wide spread, and that can turn into plus 100 wide spread, because how you adjust that that non-tested side or that tested side. So usually the non-tested side the spread will get wider, and the tested side the spread would get narrower. So anyway, any questions on that, you guys, before we move on?
Hi, hi, O'Brien and Dr. Meadows. I have a question. On days like this, there was a report on, I think it was GDP at 8:30 Eastern Standard Time, and then there was another report which was more important, I guess, the Federal Reserve inflation rate, like that what they're looking at. I think it was PCE.
Yeah.
That came out at 10. So how do you navigate that when you have two reports that are both market moving when you put on the zero DT trades?
I'm gonna let you answer
Well,
that first,
yeah.
Dr. Mills.
Yeah. So the first report, I believe that was pre-market, wasn't it? And that contributed to
Yes,
this pretty
sir.
big down move. Yeah. So we were already down 2%, and as a very general rule, if we already have a pretty good move, which I would consider 0.75% or more already, I'm actually kind of inclined to get in a little on the earlier side, figuring that the majority of whatever move we're going to have has happened, right? So hence, like, I'm gonna go back to my activity tab and just kind of look so I can give you an exact thing, because I was cognizant of that other news that came out at 10 o'clock Eastern. So I got into the trade at 10:16 is when I got filled. And again, we were down. We have been flirting down anywhere between, I think we've gone down as much, I think 2.1, 2.2%, and we've come back to maybe like 1.7% down when I got in. So again, I kind of figured most of the move for the day was in. Now, as it turns out, as soon as I got in, we started to see this slow, steady, reversal, the market starting to go back up and whatever, hence, the challenged on the call side. And I think O'Brien mentioned he was challenged on his call side as well too. So, with whenever I did this adjustment here, I guess I can look back and see when I did that, just to give a flavor of the kind of time. Let me just see here. 10:15. Whenever that would have been, and actually it was pretty quick. So I got in the trade at 10:16. It looks like 10:33 actually. So like, what is that?
About 15 minutes.
17, 15
Yeah.
minutes later, I'm
Yeah.
already making the adjust. Yeah, I made that adjustment. And so again, if I would have had the foresight to get in, at 10:30, maybe I don't have to make this adjustment at all, or I wouldn't have on a day like today. So, like I said, I've been trading this so long, I know there's no magical time. I mean, as a general rule, do I ever get in before 10 o'clock? Generally, no. I do think that there are some market inefficiencies and order size things that are going on with volume that can really make things move kind of unpredictably. So like I'll never get in before 10, but I got in pretty early. And again, the magic would have been to wait another 15 minutes. But again, I was there to to adjust, and manage it.
So the main thing with Dr. Meadows is saying, in my opinion, is that he came in a little earlier because we already had a decent sized move, and it didn't get the timing great, because great timing is you don't have to adjust at all, but got the timing well enough that you win, right? Because it would have to be a pretty substantial reverse, bigger than what it was, or at least significantly faster than what it was, to make the trade a difficult trade. So in this point, it wasn't a difficult trade, I don't think. And so with the way I think about it is the same way Dr. Meadows thought about it. I went in, maybe 15 minutes after the market opened, and my thought process was that, okay, we were down 100 points at the time, or at least when I put the trade on. So I was thinking, okay, it's no way we're going to go down another 100 plus points today. I just didn't feel that it would be the case. And in retrospect, I thought the risk was to the call side. Just didn't think we would